Joining us now is Sandeep Kalra, the Executive Director, as well as the CEO of Persistent Systems. Mr. Kalra, good morning. Thank you so much for joining us here. Just give a quick highlight as far as your numbers go, but just seeing that would be fair to say a 25% plus growth is feasible for this financial year, just seeing how this quarter and the last quarter has been, if you were to extrapolate.
Let me start with giving you a comprehensive color on the quarter gone by. And so if you look at the Q2, as you rightly said, we came in at about 9.3% quarter on quarter. This was on a back of 9.2% quarter on quarter the last quarter. So it's been two sequential quarters of pretty strong growth. This quarter saw us at 34% year on year basis. And on rupee terms, it was about 34.1%, year on year basis. Now, obviously, this is coming on back of, healthy growth in all the verticals we play in, starting with the healthcare life sciences segment, which grew, the highest at about 13.5%, followed by BFSI and software and high-tech segments by about 8.6% and 8% respectively. So overall, we are seeing very good demand. We are seeing a good pipeline. And so we are optimistic of the growth going ahead. Obviously, some quarters may be at this level, some may be tad bit higher, tad bit lower. So that is where the demand scenario stands today.
Okay, so we've got the color of the quarter that's gone by. So coming back to the question, is a 25% growth feasible for this financial year?
So look, we are building the company for the longer run. We have delivered 9% last quarter, 9% this quarter. If we do the maths right, looks to be achievable, what you are talking about, but, I let the forward-looking quarters get delivered. And we are pretty comfortable with the demand at this point in time.
Right. Sandeep, your deal wins increased by almost about 15.5% on a sequential basis. Would it be fair to say that you're going to continue to have a quarterly run rate of about 250 to 300 million or dollars when it comes to deal wins, basically about 1 to 2 billion kind of range in a year?
Right. So if you look at the last 4 quarters, and we started, announcing our deal wins about 4 quarters back, and we have been in the range of, the 225, 250 million range. So we are comfortable with this total contract value range. And, as time goes by, we are also, participating in even larger deals. So we expect this to be stable at this, and, some quarters may even be higher, and some quarters may be tad bit lower. But yes, this is the range we are comfortable with.
Sure. You managed to improve your margins in the current quarter, but just wanted to understand about the sustainability and how do you foresee them panning out in the near term, especially given the high demand environment and low supply?
Right. So we have been saying that we are comfortable in the 16% to 17% EBITDA band. And look, there are always puts and takes. On one side, we have the pricing, side where we have a good leverage in the current market environment, and our customers understand the dynamics we are playing with. And so there is that positive side of it. In terms of employee cost, overall ability to attract and retain talent, et cetera. So there is definitely, there's some pressure there. But overall, if you look at it, we are confident of maintaining the margins. Our first thing is to make sure that the priority remains on strong growth. And with strong growth, there are certain, factors like SG&A, some fixed costs, et cetera, that get apportioned over a larger base. That also gives us a lever. So overall, we are comfortable with the margins where they are, and we will try and be between the 16 to 17% range. So that's where the margin profile is.
With attrition at 23%, how are you planning to manage? How are you managed to employ the motivation, workforce, employee costs?
I look at attrition as a healthy challenge. If you look at it, what is driving this level of attrition is the overall demand environment. If we look at it, overall the industry as it is coming out of the pandemic, the digital transformation side is accelerating. We are right at the cusp of where the digital transformation is on the enterprise side, and on the ISV/tool provider side, we are the guys who are partnering with people to accelerate their product journeys. Now, having said that, I would take this environment compared to not having a strong demand environment any day. We are looking at across the industry, whether it is NASSCOM, whether it's us, whether it's our peers, looking at how do we, bring in more people into the tech side, more on the digital side, whether it is through fresher hiring or through, lateral training, retraining, and from other sectors as well. I'm confident we will, perform well in this environment as well. We have further upped our employee value proposition by doing things like employee stock options, where we have, about 80% of our company covered as employee stakeholders, giving them, participation in the shareholder value creation as well. So overall, from a demand environment being good, from a supply side, us bringing in more talent, making our employee value proposition even more stronger, I'm confident we'll continue to perform within this. And this situation should ease over the next 3-4 quarters. So that's our point of view, and we are fairly optimistic about it.
So walk us through your two acquisitions. How do they fit in the overall scheme of things? Because you've acquired Software Corporation International and Shree Partners.
So from a acquisition perspective, we have been saying that we will acquire for capability, going deeper into an industry vertical or a service line, or going deeper into a particular geography. Now, Software Corporation International fits beautifully into it. It is, furthering our journey into the banking financial services segment. Payments is at the heart of banking financial services, and that's where SCI fits in. That gives us also an inroad into marquee customers who are among the top 20 in the US. Predominantly, their customers are banking financial services organizations in the US. So that's where, it is a very good fit for us in furthering our BFSI journey. Shree Partners was a part of a vendor consolidation that we did at one of the customers. And this is a $50+ million deal that we signed this quarter with a large customer of ours. So it kind of came along with that, and it is a good fit into our cloud infrastructure journey. So pretty much, furthering our growth into the sectors that we want.
Sure. Give us some, demand environment, color on demand environment, how it's panning out right now, especially when it comes to services, to IP business, as well as the healthcare category.
So in healthcare, again, there's a significant move toward digitization, and we are working with many different segments within healthcare. So on one side in healthcare, you have the companies that provide, instrumentation related, products, and these are, high end of medical devices, both from a, software platform perspective and diagnostics and many other things. On the other side, we also work on the other spectrum, the provider side of it, where we are very strong on capabilities across, even service lines like Salesforce, where we have capabilities around digital front door and others. So we are pretty much seeing a good consistent demand, whether it is around the instrumentation companies, specialty pharma, providers or payers for our services. And that is what is driving our sequential, very strong growth in healthcare. And we see the demand in.
Okay, Sandeep, great to have you on the show. Thank you so much for giving us all the highlights of the quarter went by.